The Trade Desk, a leading advertising platform, has released its Q2 earnings report. And while the numbers look good on paper, the market's reaction tells a different story. As the advertising landscape continues to evolve, the Trade Desk's position as a champion of the open web faces a crucial test. The company reported Q2 revenues of $694 million, a healthy increase from $585 million in the previous year. Net income rose from $85 million to $90 million during the same period. However, the growth rate has slowed from 26% to 19%, a trend that has left investors feeling uneasy. Despite outperforming the market, the diminishing growth rate has sparked concerns about the company's long-term prospects. The Trade Desk's net income margin has also taken a hit, falling from 15% to 13% in just one quarter. This decline, coupled with the slowing growth rate, has led to a mixed reaction from investors. In an effort to revitalize its leadership, the Trade Desk announced significant changes in its boardroom. Alex Kayyal, a prominent board member and early investor, will take over as CFO, replacing Laura Schenken. Omar Tawakol, an ad tech veteran and founder of Rembrandt, an AI-driven startup specializing in creative and product placement, will join the board. But the real intrigue lies in the Trade Desk's relationship with the walled garden giants. Founder and CEO Jeff Green argues that the open web, including streaming TV apps, is where the real engagement lies. According to Green, premium ad-supported internet performs better than walled garden platforms, citing examples like podcast listening and YouTube ad skips. He predicts a future where ad spend will shift from walled gardens to the open web. But this prediction is not without controversy. While Green acknowledges that the Trade Desk competes with walled gardens like Google and Amazon, he downplays the rivalry, stating that these companies have largely abandoned the open internet. He points out that Amazon's DSP, demand-side platform, is not a top priority, and Google's focus remains on search and YouTube. However, this argument may not be enough to sway investors, who remain skeptical about the Trade Desk's ability to challenge the dominant players. The Trade Desk's AI-driven advertising vehicle, Kokai, has seen significant adoption, now accounting for 75% of all budgets on the platform. Green confidently predicts that all clients will be using Kokai by the end of the year. He also touts the Trade Desk's data assets, claiming that the company processes more transactions every 30 seconds than Mastercard and Visa combined. As the advertising landscape continues to shift, the Trade Desk's ability to adapt and innovate will be crucial. But here's where it gets controversial. Is the Trade Desk's success truly based on the reversal of walled garden dominance? Or are they simply riding a wave of open web popularity that could eventually crest and break? What do you think? Is the Trade Desk's focus on the open web a winning strategy, or are they underestimating the power of walled gardens? Share your thoughts in the comments below.